It's the end of the world as we know it. It's the end of the world as we know it. It's the end of the world as we know it. And I feel fine. Good morning, everybody, and welcome to the Crypto Mining Show, your one-stop shop for all news surrounding cryptocurrency from the perspective of a cryptocurrency miner. Your host is myself. I go by Blind Run. That is my gamer tag. My real name, IRL, is Matt. So pretty generic there. Try to dox me. Please don't. Just kidding. Anyways, today, well, a lot of stuff's going on, huh? I made a joke yesterday, I think it was actually on the 22nd because it was 2/2/2022, that, you know, the world hasn't ended, so I'm going to buy more mining equipment. I guess that still holds true, but it sure is getting a little dark out there these days. So everybody keep your heads up. I know it's a little bit stressful. I think I woke up around midnight last night and kind of checked the phone and was like, oh no. So I think everybody's aware of everything that's going on. We're going to still focus primarily on cryptocurrency today. We'll answer questions and thoughts at the end of the show, of course, and how that all relates. I am going to pull my hoodie off because we got two miners running back here. So it's warm in here. It's cold as could be out there. But before we get into it today, we will run an ad. Today's topics, we have a new G-Miner release. We finally have major tech outlets covering the LHR 100% unlock being malware, thanks to, of course, the work of the cryptocurrency mining team, especially all the guys over at Red Panda Mining and Chump Change, etc. So huge shout out to them for going ahead and verifying within a VM, which is the safe way to do it. Then we are going to talk about the new GA103 3060 Ti. We are going to be talking about RTX 4080s and 4070 launch dates. We then have, of course, the big news of the day for cryptocurrency, which is going to be kind of that comparison of gold, fiat, and cryptocurrency when it comes to global crises, I suppose, like we see in Russia and Ukraine. And then, of course, some of the ramifications of central banking as it pertains to, you know, basically global crises and what ends up happening there. But before we get into it, like I said, we're going to run the ad. Definitely check out the affiliate link down in the description. It helps me out. And we'll get into it. Today's sponsor is BT Miners. Purchasing mining equipment online can be dangerous. With all of the fake storefronts and scams, it can be hard to find a reliable source. That's why when BT Miners reached out for a channel sponsorship, I started by verifying that ordering and delivery went smoothly with a purchase of my own. If you are looking to purchase ASICs hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both ASICMinerValue.com and CryptoMiner.com. Follow the affiliate link in the description and use promo code FREESHIPPING2021 for free shipping on your order. Ooh. Alrighty, first things first, of course, to all of the Ukrainian viewers. I hope you guys are doing well. Stay safe, stay warm, and just condolences for everything that's going on. I don't have too much control, obviously, but I hope that everything is going good. And if you are able to tune in from a safe place, hopefully this episode will basically allow you some reprieve and a little distraction. Let's go ahead and get into the first thing, which is going to be, we did have a new G-Miner release 1 hour ago, and it is version 2.81, and this was 1 hour ago. They added support for Stratum protocol for TON, and they support specifying of protocol with the server switch, so -- server, and then that would be like, basically it would look like this for Whales TON pool, and then of course the Whales TON pool with the specified port. So essentially, here's all the usage examples. Pretty basic update. I assume this is kind of coming along the lines of essentially just the differences between traditional mining pools and of course the way TON functions. For those that are not familiar, TON is a proof of stake algorithm, but they did distribution in a much different way. Instead of your typical proof of stake like airdrops or IPOs where people invest and they get a certain amount, they put all of the TON for emissions into smart contracts that then are basically mined. So then you have a giver contract and then that gets sent out, and that's how the mining functions. So because it's a little different, the connections have always been a little bit different. Support for various pools have been different. As more traditional pools came online, like ice mining, for example, it made it easier for, miner developers to go ahead and get in there and actually start creating, support for the coin. Outside of that, it took a little bit for them to start figuring out the protocols. So when you see miners that are newer to, of course, mining TON, for example, Team Red Miner, when they only supported 2 pools, it doesn't mean that they necessarily had any sort of deal with the particular pools at hand. It just more than likely meant that it was a protocol thing. And that is why those were the only pools that were supported initially. More and more pool support is coming along for more and more miners. This is just an example of that. And that's kind of my reasoning behind it, as far as I understand it. Now, yesterday, so it's been a little fun. I think it was earlier in the week, I believe it was Monday, we had this announcement of the light hash rate 100% unlock. I made a quick short on YouTube saying, hey, don't download it. It's a scam. Now, my reasoning for the scams wasn't just the suspicious GitHub launch, which was only 18 days old at the time, and also had essentially no actual releases on it, just a way to go ahead and go to an outside download link. That's already suspicious as it was. The next thing is that the promotion for that miner, or not, I guess that unlocker, right, the BIOS flasher, was being promoted utilizing stolen thumbnails from my videos, Red Panda's videos, etc., and then being put up on these one-stop shop kind of YouTube channels where it was like, here's the only video on the channel, we're going to steal a thumbnail and then try to manipulate people into downloading it. All of those were red flags for me. Now, I was going to go ahead and do what essentially Chump Change and everybody did. Luckily, they did the work for me and Yeti primarily yesterday, and got onto a VM, downloaded it, and scanned it for viruses. It was in fact filled with malware, according to VirusTotal, which is pretty accurate for the most part. I did want to point out that as far as VirusTotal goes, when you put in a mining application in particular, it is very common for viruses to pop up and get false flags. And that's due to pretty much all cryptocurrency software being kind of flagged already by default. And on top of that, a lot of the miners that you download are not signed. And that signing process goes through Windows, and so you can get a lot of false flags. So the whole 18 viruses in total or whatever, some of those are probably from false signatures. Some of those are from whatever else going on in there, not necessarily all malware. But it was pretty clear that as soon as Yeti basically installed the application, that it did basically start running that driver application. Specifically, the driver, what I saw, was running as a service, which is definitely sketchy. So you want to basically check that out and be very careful. One of the things that I think that they did get wrong in the live stream was the GitHub application running in the background. And that one in particular is actually a Discord thing. So that one was normal. I went ahead and researched and made sure that that was true. So I'm not sure that that really had anything to do with it. But suffice to say, there's enough evidence there to show that it was in fact malware, especially once it was exposed. The GitHub was taken down immediately. And if you guys recall, I got scammed with the video in regards to kind of front running and trying to learn that with the ETH remix or whatever. Now, it's kind of a similar situation. As soon as it's exposed, those videos get taken down, those GitHubs get taken down. And that's because whoever is running the scam doesn't want to be found out, right? They don't want their location revealed. They don't want to get doxxed, anything along those lines. They don't want to get into basically any sort of legal trouble. So at this point, you can't even download it, to my knowledge, which is good. And if you could, I still would recommend, obviously, not downloading it. So huge shout out. Make sure you guys go subscribe to Chump Change, Red Panda Mining, all those guys. Together, we can keep covering these topics. And that's kind of where we end it. But we do have more GPU news. And the first one is coming from WCCF Tech. NVIDIA Ampere GA103 GPU makes desktop debut in the Geforce Rtx 3060 Ti graphics card. Now, if you guys recall, we had been talking about this kind of revision of the 3060 and 3060 Ti lineup that was also kind of lined up with their mobile chips. And what these are, or what they're doing for the 3060 in particular, is moving to the GA103 from the GA104. And what that means essentially for you is potentially lower power consumption on these GPUs. And so these could be, while still light hash rate, better than what's currently on the market from a power consumption standpoint. And that's why these are relevant. So NVIDIA recently introduced Ampere GA103 GPU, has made its desktop debut in the Geforce RTX 3060 Ti graphics card. The NVIDIA Ampere GA103 GPU is power optimized SKU that sits between the GA104 and the GA102 GPU cores. It was officially intended for the mobility segment in the form of the GeForce 3080 Ti chip, since the GA102 GPU was a bit too power hungry for the laptop platform. The chips that aren't making their way to the GeForce RTX 3080 Ti mobility GPU end up recycled by NVIDIA for their RTX 3060 Ti lineup. So as you can see here, we get some specifications. Not too much of a difference in anything here. We have the same stream processors, 4864, same video memory, the 8 gigabytes of GDDR6. You do have a 256-bit bus, and then you get your frequencies here. And all kind of like wrapped up. Zotac has now listed several custom RTX 30 Ti graphics cards that feature the GA103 GPU, and more specifically the GA103 200 variant. The original design came with the GA104 200 GPU core, and in both cases, the RTX 3060 Ti ends up with a cut down core design. The RTX 3060 Ti rocks 1280 lower cores than the full GA104. Okay, so it does have lower cores. My bad. Sorry. And 2,816 lower cores than the full GA103 configuration. With that said, all models based on the GA103 and GA104 GPU SKUs feature similar specs, and besides some internal power and clock management, the high-level specs remain the same. Following are the variants from the Zotac-equipped GA103. So here you go. Those are the variants. Let's go ahead and make sure I got all this correct then. So here's the 3060 Ti. Did they not list the two? Here we go. You got to scroll over. No. So I'm not actually seeing it listed. That's the GA104. So let's see if we can get this 4864. 4864. See, I thought that was the same. Okay. Let's look at the rest of this then. They didn't really put it in a chart easy for us to read. The big thing, 448 gigabytes per second on the memory. I don't think there's any memory changes. They didn't specify that though, did they? But we do have the same bus and the same clock, so that should still be the same. And then you had 175 watt TDP. I actually think I was wrong. They went up from a GA104 to a GA103. So the power consumption does look to have gone up by 25 watts. So you'd want to get the older models. Let me reverse what I said earlier. It looks like because they went from the GA102 to the GA103, which is a cut down from the 3080, 3080 Ti, essentially, you have worse power consumption on the GA103 versions of the 3060 Ti than you do on the older GA102 versions of the 3060 Ti. So if you are looking specifically for mining and lower power consumption, more than likely the old revisions of the 3060 Ti would be the one that you would want to purchase, as it should be lower power consumption. There we go. Do a little bit of on-the-fly correction there as we get more details. As always, that's kind of the way it works, especially when you're live. I hope that I made that clear, though, and that we are all on the same page. In the note of a more exciting GPU launch, we have September rolling up here quickly, and the Geforce Rtx 40 series Ada Lovelace GPUs are rumored to launch this year. So what's insane is it could feature a blazing 850 watt TDP. Now, we talked about this because we do know that the power supplies are now starting to come with single 12-pin revisions of the new power adapters for PCIe, and it's going to be really hard to build essentially mining rigs with these particular setups. But ready your PC, and especially the PSUs, because NVIDIA's next-gen Geforce Rtx 40 Ada Lovelace GPUs are rumored to consume almost a kilowatt of power. There have been multiple reports that NVIDIA next-gen Geforce Rtx 40 GPUs based on Ada Lovelace graphics card architecture are going to be insanely fast and insanely power hungry. Now the latest rumors coming from Gray Moon seem to point out the flagship GPU, the AD102, could consume over 800 watts of power. According to the latest information, Gray Moon 55 mentions that Geforce Rtx 40 Ada Lovelace GPUs could be available as early as September of 2022. But the launch isn't the most interesting part that is mentioned in the rumor, but the alleged power figures. Both leakers state the flagship AD102 GPU will have multiple SKUs for the RTX 4080, RTX 4080 Ti, and RTX 4090 desktop graphics cards. It looks like these GPUs will also feature different power targets, with the entry-level GPU hitting 450 watts of peak power consumption, followed by the Ti variant around 600 watts, while the flagship RTX 4090 could end up with a monstrous TDP of around 850 watts. Both leakers do state that these aren't based on the final specifications, and the power figures could change in the retail variants, but there's a good reason to believe why these could end up being true. NVIDIA is already investing development around the new PCI Gen 5 connector that offers up to 600 watts of power input per connector. The delayed Geforce RTX 3090 Ti is one example where the card is expected to rock at a TGP of 450 watts and will be the first desktop graphics card to utilize such a connector interface. The next-gen cards are also expected to utilize the same PCIe standard, but it looks like the top variant could end up with 2 Gen 5 connectors to supplement the 800 watts of power requirement. It's also important to note on these power requirements that if you're looking at the ASUS power supply that we looked at with their specifications versus the MSI, there's some specific power design differences that are going into that single plug, meaning that at this time, from what I saw on the ASUS side, they're only hitting 450 watts through that PCIe 5 power connector, while the MSI has the full-blown 600 watts. So if you're going high end on these particular GPUs, you're also going to have to be very careful on the fact that just because it has that connector doesn't necessarily mean it will support the 30 or the 4090. And that's going to be extra sketchy for everybody trying to build mining rigs, especially. And I don't even know if these are going to be something that you want to mine with. Several PSU makers have already started releasing their brand new Gen 5 power supplies, which would include necessary connectors to support the next gen GPUs, but they only feature one primary Gen 5 connector, which means that if NVIDIA was to use a second 16-pin port, users will have to use a 2x8 pin to 1 to 16 pin adapter, which will ship with most of these PSUs. Oh, it's going to be a mess. Of course, these are all rumors for now, but both leakers have very high credibility based on their previous rumors and leaks, so this might end up being true. Considering that NVIDIA is aiming for a huge 2x performance gain with their Ada Lovelace Geforce Rtx 40 series lineup to compete against AMD's RDNA 3 offerings, the Green Team could be going all out, and that includes power and pricing besides just performance. Now, it is important to note also that from the perspective of somebody that's been in the GPU kind of scene for a long time now at this point, even making videos for over 10 years now on specifically just hardware, PC hardware, one of the correlations that you need to pay attention to is that usually when any given company is starting to push out as much power as possible out of their current architectures, it means they are falling behind. Now, in the past, what we have seen, of course, is this from the AMD side after purchasing ATI and running out of the ATI roadmap and figuring out that they didn't really have the power to compete with NVIDIA and essentially just making really hot, really power-hungry GPUs to compete for as long as they could before they finally revamped their architecture. And then it took a long time for that architecture to catch back up to AMD. Here recently it has. To me, this sounds like NVIDIA is definitely a little scared of AMD's RDNA 3. And that's because also, if you look at the path, if you look at the path that AMD is taking with the latest generation with RDNA 2, they have focused primarily on reducing the amount of power that their GPUs are taking, but at the same time, increasing their performance. So they have much better power to performance figures. If you look at straight up traditional rasterization on the 6900 XT versus the 3090, the 6900 XT is outperforming by 10 to 15% in traditional rasterization, while NVIDIA is trying to use software tricks and adding more power to the GPUs to catch up, even to the point to where I believe the 3090 Ti is hopefully for them going to dethrone the 6900 XT on traditional rasterization, but is going to have that high 600 watt TDP. So that's kind of like how these cycles go in the competition for the GPU race. Previously rumored specs have shown as a huge update to the core specs. The NVIDIA 8102 ADA GPU appears to have 18,432 CUDA cores based on the preliminary specs, which can change provided by Copipe. This is also almost twice the cores present in the Ampere, which was already a massive step up from Turing. A 2.2 gigahertz clock speed would give us 81 teraflops of compute performance, FP32. This is more than twice the performance of the existing RTX 3090, which packs 36 teraflops of FP32 compute power. So here you go. This is rumored performance estimates. They are rumoring RDNA 3 above 8102 here. And the specification differences. Now, GDDR6X with the 384-bit bus. Now, if this is true, the only thing that's going to increase the mining performance is going to not be the bus width, right? And not be the memory type, but the memory speed at which they're saying they're going to get GDDR6X up to, which could get up to that 21 gigabits per second. Whereas right now, you're really stuck at that 19 gigabits per second. That's really the only memory performance gain that you're going to get for mining. And I don't think that's enough to actually make the amount of power consumption increase really worth it. I'm genuinely not expecting much from the mining community or for the mining community from this release, personally. So that's kind of how I think about it. I'd like to hear your thoughts in the comment section and, of course, the live chat when I get through to reading it. In regard to Intel, because I do see that in chat, Intel does have GPUs coming out. They have the most promising price to performance for GPU miners that I see coming out, primarily because while the performance they aren't doing like that top end performance for GPUs, what they are doing that's very interesting is very low power consumption, sub 35 watts, but still maintaining a 128-bit bus, which means a potential of 30 megahash a second at sub 35 watts, which means as far as power to price goes, or power to hash rate goes, is going to actually blow everybody else out of the water, if that's in fact true. The hard part there, of course, is going to be how much space you have in your farm, etc. That density of like a 3090 rig versus needing, let's see, what would it be? It would probably take like it would be like a 4-to-1, right? So you would end up having to have like, for every one 3090 hashing, you would have to have 4 of the Intel GPUs. If my predictions are correct on what that is going to be at hash rate, which is about 30 megahash a second, So you're going to need like 4 of those for every one 3090. So you're going to have a density problem, but for large mining farms, it definitely looks like that card's going to be the most appealing. That's the one I am looking at for sure. Now we get into the fun part, the not fun part. We will talk about it. Like I've said before, unfortunately, because this is cryptocurrency, I know a lot of people don't agree with my politics. You don't have to. I wouldn't even say that I'm correct about it. I definitely get things wrong. I'm willing to have open conversations about different things, but because of the nature of cryptocurrency and its tie-ins to both, local and international politics, it's kind of impossible to go through it and not discuss politics to a certain extent. I'm not even sure that really we would say that the Russia-Ukraine thing is necessarily politics at this point. But we have an article here from CoinDesk that is pointing out something that I was kind of talking about, I think, over the past few weeks, which is that weird correlation between the stock market and cryptocurrency. Now, in my humble opinion, from the view of it, I think, yeah, go ahead and throw things like Ethereum, Solana, Cardano. I don't consider them to be separate from the stock market because they're, essentially board-run, developer-run projects that essentially when you're investing in them, you're kind of investing into a company, as opposed to Bitcoin, which doesn't have that oversight, does function more like a currency or at least a store of value from the public's perception as a whole. I think there needs to be a decoupling of the markets that really clearly acknowledges the definitions of each cryptocurrency, especially if we're looking at the white paper for Bitcoin. I think a lot of that is unrealized by the general public, which is why Bitcoin kind of gets lumped in over here and ends up being translated into being closer to the stock market, which is obviously due to the stuff happening with Russia and Ukraine right now, causing huge dips in the market, where I think Bitcoin's at 36,000 right now. Ethereum's down to 2,473. All the rest have, just they're all getting slaughtered. And part of that is this. The point is, though, of this article is that traders prefer gold and fiat for safe havens over Bitcoin as Russia goes to war. And this is interesting. So, and we need to be aware of it. And we also need to be realistic about it as cryptocurrency miners and investors, because, just because you may know, or I may know, that it's a more solid investment than fiat currency doesn't mean that's the way the rest of the world sees it. And because all of this is based off of price, what people are willing to pay, we have to take this into account. Like, it's not something that you can just ignore based on your principles and your own personal belief system, because what's happening, what is reality, is important, right? And so don't get too clouded by your your involvement within cryptocurrency. So good morning and welcome to The First Mover, our daily newsletter, putting the latest moves in crypto markets into context. To get it in your inbox each week and each morning, blah, 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 you can sign up there. Here's what's happening this morning. Market moves. Bitcoin drops, gold rallies as Russia attacks Ukraine. Bitcoin risks deeper drawdown as U.S. traders prefer commodities and fiat safe havens amid Russia-Ukraine crisis. And so let's do it. Russia's decision to wage war on Ukraine has sent shockwaves through financial markets. While equities in Bitcoin are down, gold, oil, base metals, agriculture, commodities, and currency market safe havens like the US dollar and the Japanese yen are trading higher. Broadly speaking, markets are displaying the usual unease with geopolitical tensions. However, some in the crypto community may be disgruntled to see the top cryptocurrency again missing a haven bid. Crypto pundits have long hailed the top cryptocurrency as a better inflation hedge and haven asset than gold. However, price action, particularly since the influx of institutions and sophisticated players in the market after the March 2020 crash, suggests otherwise. The cryptocurrency has moved more or less in tandem with stocks. Data tracked by Korea-based analytics from CryptoQuant shows Bitcoin's 60-day Pearson's correlation coefficient with the S&P 500. Wall Street's benchmark index now stands at a record high of 0.56. Quote, BTC or Bitcoin is getting adopted by traditional institutions, end quote, CryptoQuant said in a Telegram chat. Quote, it's being owned by new players who trade stocks. Bad news, Bitcoin is not a safe haven asset for now. It's pretty clear institutional interest hasn't done for Bitcoin what it was supposed to do, at least in the eyes of crypto investors, that is. Established the cryptocurrency as a digital safe haven better than gold. And that's because you all got distracted with NFTs and Ethereum and Solana. If somebody is introduced into the cryptocurrency market through NFTs, they are introduced through Ethereum. And we already talked about the difference between Ethereum and Bitcoin and why they are different. And if you have 80% of the population that's participating within cryptocurrency focused on NFTs, and then they are introduced to Ethereum, which has a board head and basically a whole bunch of VCs and stuff like pre-invested into it, then it clearly sits in the stock market. And because that is the public institutional investment that is being attracted to, Bitcoin isn't realized as it should be. And I'll keep beating that drum over and over again. And if you basically go into a conversation with someone surrounding cryptocurrency, you need to make that distinction every single time. You need to make it very clear that Bitcoin is not what Ethereum is. It's not what Solana is. It is not what any of these other cryptocurrencies are. Then you can have a public perception shift and then maybe it decouples. But as it sits now, and because of the way people are being introduced into the market, it's going to remain coupled with stocks. That's the way it is. The fact that fiat safe havens are doing better than Bitcoin perhaps indicates that the cryptocurrency market as a whole is at the far end of the risk curve. Bitcoin was largely uncorrelated asset before the COVID crash, and more so during the early bull cycles when institutional participation was almost non-existent. A continued risk off might push Bitcoin down to 30,000, which acted as strong support zone in January 2021 and 3 months to July of 2021. A potential break lower could confirm a double top breakdown on the weekly chart and invite more selling pressure. What I say a little while ago, I think my predictions were ETH at 1100 and Bitcoin at 21K, previous all-time highs. And then we kind of saw the institutional investing. We saw some bounce backs. We were kind of in this weird like sideways market. It seemed like, okay, well, maybe now with like institutional investments and all of that sort of stuff, maybe the bottom is this bottom. Maybe that's the case. We're going to sit here for a couple of years and then we'll go back through the traditional Bitcoin super cycle. Now, just to be clear, to define the super cycle once again, it's every 4 years. You basically have essentially what is known as the halving of Bitcoin, where the reduction of the block reward happens for the miners, meaning that they get paid half of the block reward that they previously did. And this spurs on a price increase so that miners can cover the cost of power. This is basically something unique about Bitcoin that sets it apart from other investment strategies, because you are on that 4-year cycle. After that halving happens, you end up having basically a huge spike that causes a bull run that lasts for about 2 years. And then, of course, everything kind of settles down and it crashes back down to the previous 4-year cycle's all-time high. Once that has happened, essentially you have 2 years of a bear market, and then the halving happens again because it happens every 4 years. And then the increase in interest, of course, once again goes through the same cycle. Are we going through that same cycle again, now spurred on by, of course, geopolitical tensions? Maybe. And then we just have to sit back and wait. From the mining perspective, this shouldn't be necessarily a negative thing for you. What this does is give you another opportunity. You see, the first super cycle that I was participating in, I did not get in on the opportunity quick enough, and therefore I wasn't able to build up enough hardware to actually be significant within the market. If you fail though, and here's what I did, I tried again. Once I saw and realized that there was this 4-year cycle going on, while the parts were cheap, while the pricing was good, I invested in all the hardware. And then when it started to come back up, I was rolling and I was able to do this. Not only the YouTube, but the mining farm, both of them have been performing very well for me. So this is an opportunity for everybody that hasn't gotten into it, if they want to get into it, to go ahead and hop in, because the pricing of the equipment will go down. This is not financial advice. This is what I did, and this is why I did it, and the whole thought process behind it. But it does look like my previous predictions could potentially be true, meaning that we could see Bitcoin go all the way back down to 21K and Ethereum go down to 1100. There are people that are trying to predict lower than that. I don't see that actually functioning, because I don't think that the Bitcoin miners would be able to function below that. In that case, if that happened, you would go to zero, but the institutional investment within Bitcoin mining tells me that that's probably not going to happen. The margins are going to be super thin, even to the point where I don't know necessarily if I'll be able to clear all of my costs. I'll definitely have to sit down and look at it. I think I had already run it from another 50% drop from here. It may happen. We'll be able to cover costs on the farm and then just be trying to pick up equipment through outside income from things like YouTube or whatever. If I go back and start wrenching, or if I go back and start working in IT, then we'll just build up and we'll be even stronger for the next bull run. That's the way it goes. And that's the way it sits, boys. It is what it is. Let's go ahead and talk about why, though, cryptocurrency is important. And we're going to beat the drum once again, because apparently nobody else in the cryptocurrency influencer space is beating the proper drum here. If we look at the principles and the fundamentals of Bitcoin, the point of it is a peer-to-peer cashless system that basically eliminates the need for third-party involvement, such as banks and governments. Case in point of why you want peer-to-peer transactions, self-custody too, which we talked about yesterday with Canada, or Russia, again, Russia and Canada now at this point, trying to ban self-custody and stop people from talking about self-custody like Coinbase, etc. Now we see further reasons. And from geopolitical tensions, what countries will do, or banks will do, to protect their investments is essentially tell you you can't protect yours. The Russian central bank has banned short selling amid a 50% stock market plunge as Russia invades Ukraine. So a 50% crash in Russia's stock market on Thursday after the country invaded Ukraine led the country's central bank to implement a ban on short selling. Short selling allows investors to profit off the decline of a stock, and the practice can exacerbate an ongoing sell-off. Russia's ban represents an attempt to stem the decline in the country's stock market. In connection with the current situation in the financial markets and in order to protect the rights and legitimate interests of investors in the financial markets, reduce risk and limit excessive volatility, the Bank of Russia has ordered brokers to suspend short sales on exchange and over-the-counter market, Russia's central bank said. Russia's MOEX stock market index erased as much as $259 billion in market value on Thursday, and the index was already down about 20% leading up to Thursday's plunge. During the latest sell-off, the index tumbled as much as 61% from its 52-week high. Quote, Russian markets are in meltdown, chiefly on sanctions fears and the country effectively being ousted from the international financial order, end quote, said Neil Wilson, chief analyst of markets.com. Russia ruble, also plummeted to a record low on Thursday as elevated sanctions against Moscow appear likely. Russia launched a missile attack in a number of cities across Ukraine in the early hours of Thursday, threatening to kill innocent civilians and forcing many to flee the country. Look, I would say fix the money, fix the world. You're not going to fix everything with the money, but you can fix a lot of it. The number one ramification for Russia as a whole, the Russia bank, the Russian people, the Russian government, is going to be the amount of money they lose in the case of invading Ukraine, or that would have been. Basically, because third parties control this, banks and the government, they're able to kind of manipulate it into a fashion where they don't lose as much. So they don't suffer as much of the consequences as they would have originally. If you have a peer-to-peer cashless system that is allowing people to transact between each other without the involvement of the government, then essentially at that point they would be at a bigger disadvantage than they are now, where they are able to interfere with it, and they would be disincentivized to make moves against the public from a financial perspective. And that is the reason Bitcoin is important. And that is the reason Bitcoin sets itself apart from things like Ethereum. I hope I've made that very clear. This is just case in point. All right. Let's go ahead and look at mining profitability for the day. I'm going to get a couple more things up here that I didn't pull up. And BT. All right. Let's go ahead and start with Ethereum. Now, I did get my farm functioning a lot better, and it got cold. So we moved all of our equipment down lower. We talked about this yesterday, and now we're sitting around 30 degrees. It got so cold in Texas that they actually delayed school. See, here in Texas, we don't actually need snow. We just need it to get really cold, and we're like, it, we're going to sleep in. So they basically delayed school for 2 hours this morning because it got that cold. And so the rigs are running exceptionally well right now. And I want to make that very clear because that does make the comparison to yesterday a little bit more difficult to correlate. We were doing pretty good yesterday though because it was cold as well. We are up on Ethereum primarily due to the sell-offs, if I had to take a guess, and that is at 0.0834 ETH, and that is an equivalent of $207 for the day. Really, we're up from yesterday, which is good, but that kind of goes back to the whole mining thing that we've talked about before, where like even if the markets are going down, in a lot of cases, because that increases the transactional fees, essentially, that you actually end up profiting usually a little bit more in that case as a miner. And the thing is that the most dangerous thing for a miner is basically like sideways movement where not a lot of transactions are being done. So big dips, big increases, these are things that miners are usually like looking at and profiting off of as far as the total amount of whatever cryptocurrency you're mining. And of course that cash value in return for that at a later date or even at that time. So things are looking pretty good right now. I would expect them as the market settles into its low point, whatever that may be. We went hard today. Whatever that may be, right? Whatever that low point may be is going to essentially, once it settles in, then that's when we're really going to start hurting in the mining market. That's when we're going to start seeing more and more equipment sell off. Okay. And that's kind of the way it rolls. Now on Bitcoin, we did do 0.0004. We have not had another shut off of the miner, so it's looking pretty good. And that resulted in $15 for the day, essentially. So not looking too bad on that either. Our 24-hour hash rate it has been at the best it's ever been so far on this coin miner at 96 terahash a second. Let's go ahead and look at the markets and see if we have any huge changes in hash rate. At this time, it doesn't look like it. Bitcoin had that huge dip from 202 megawatts getting shut off in Kazakhstan, and then has now settled into its basically its new average, which is around that 200 exahash a second. And it still remains to sit there from what I can tell. Taking a look at Ethereum, we are still sitting right at that 980 terahash a second after that 20 terahash a second came off the network around the same time as the Bitcoin mining came off the network. It usually was sitting around 1 petahash a second. Now it's at that 980 terahash a second. Let's go ahead and look at Flux and get an idea of what's going on with the Web3 boys. They do have 50% of their hash rate on a single pool now. It was down like under 50%. Now, okay. So traditionally, just to give everybody an idea, there has always been this worry of a 51% attack on proof of work coins if a hash rate is above 50% on essentially a mining pool. In regard to Flux, it doesn't really apply because they do have the node portion, which is validating and actually getting a portion of block control. So you would have to have 51% of the nodes and 51% of the hash rate, and then potentially there could be an attack. It's still not good, in my personal opinion. So spread out that hash rate a little bit more if you are going to be mining on Flux. Let's see if those solo blocks are coming still as well. And it looks like we had one. Yeah, we've had two nice hash rentals on minerpool.org today. And we had one on 2Miner solo as well. So they are still, whoever is renting out that hash rate and spiking up the network hash rate is still performing at that. We're at 2 mega solutions a second right now. Let's take a look at Ravencoin and see if there's been any significant changes in Ravencoin. And it, well, yeah, we're under 4 terahash a second. So we have dropped off. I'm not sure exactly why, but it was settling in between 4 and 4 to, well, actually higher than that. If I recall, we were at like 4.25 to 4.5 terahash a second. Is there a particular pool? 2 miners? No, I don't see a particular pool. So it seems pretty evenly distributed for this drop in hash rate. A lot of the things that you'll notice with especially Ravencoin are like a lot of the spikes, and I still think that's primarily due to the proof of work algorithm that's very demanding on the GPUs. Let's take a look at Ergo, and just being the nature of being a smaller cap coin as well. I still have 2 mining pools offline for the invalid block height. 14.75 terahash a second. Seems to be sitting right where it should be. So no worries there. All right, so that's pretty much that. Mining pool profits for the day. Last 90 days, mining pool hub in first, flex pool in second, crazy pool in third. Last 60 days, mining pool hub in first, crazy pool in second, flex pool in third. Last 30 days, mining pool hub in first, flex pool in second, ether mine in third. Last 21 days, mining pool hub in first, flex pool in second, ZET in third. For the last 2 weeks, mining pool hub in first, flex pool in second, 2 miners in third. For the last week, mining pool hub in first, flex pool in second, nano pool in third. For the last 3 days, mining pool hub in first, ether mine in second, crazy pool in third. And for the last day, mining pool hub in first, crazy pool in second, and ether mine in third. Let's take a look at the ASICs, not the TON coin, but the ASICs. And we are pretty much sitting, Kadena has not really moved that much, $106 a day right now, still sitting right there. It's in first place, KD5 coming in. You have the A11, the L7, the KD2. No huge changes in ordering. And actually, surprisingly, on the ASIC front, not huge changes in profitability until you get to Bitcoin, where they're saying the S19 Pro is down to $12 a day. So Bitcoin's definitely taking a hit. Surprisingly, Kadena is not taking as much of a hit on the mining front. Are there any sales going on? Well, not really. Still the same sales. So if you're interested, BT miners, use the affiliate link down in the description below. I think we had discussed, which ones I would be purchasing. I probably will be purchasing some more koi miners just because of their pricing. And I'll be purchasing them through BT miners. And then from there, maybe grab an M21S to test. They're not bad at the 3,800 for 56 terahash. Right now, it's pretty scary. I'm expecting next month to have better pricing. So I don't know that you actually purchase anything right now, unless, of course, you're hitting up those used markets, seeing what's going on, seeing if anybody has any particularly good deals. I did hear of someone getting a 6,600 for $170. That is fire. So, if that's the case, obviously go get it. If that's not the case, based on what Gray Moon's saying, all the current leaks based on what we're seeing, of course, with the geopolitical tensions, I'm expecting a lot of the hardware market to come down. So there you go. I want to say thank you for the super chat from J Lups. Has finally made it on time for a live stream. Max power efficiency or max hash. GPU price being irrelevant. So 2080 Ti versus 3070 LHR in flux. Mega hash per watt is better on the 3070, but more hash is pulled from the 2080. That's going to be dependent on your particular location and your power cost, right? So you always want to be taking into account that profit after power cost. So plug your power costs into what to mine, plug the hash rates in, and then see how much of a difference that makes. In an ideal world, of course, you were always trying to go with the best hash to power ratio, but that doesn't necessarily account for density, which can be an issue, of course, that will contribute to heat output as well. So you need to kind of play those games. You need to play those games with like your square footage, what your ventilation is going to be, what your power cost is. And you're going to have to make that decision yourself. But like I said, in an ideal world, you're always going with the best power to hash rate ratio. Like I said, with the Intels coming out, it's really interesting because they probably will have the best power to hash rate ratio, but their density is going to be pretty bad. And here's the weird thing about density too, because if you have, let's say you have like, and it'll depend on the size of the building, but like, let's say you have 4 of those Intels and then one 3090, right? And you have the same enclosed space. Technically, you are using more power, right? You're using like 300 watts of power on the 3090, and then you're using maybe like 120 to 150 on these supposed Intels that we're projecting to be around that power consumption if you had 4 of them, but they're more spread out, right? in theory, if you get a small enough space, you are still going to have some heat issues on those 4. Plus, you have 4 more points of failure. You have 4 more risers to worry about, 4 more cables to worry about, more motherboards at the end of the day to worry about, and more PCI connectors, which technically means potentially even more power supplies, even though you're using less power. You're probably going to be more reliable, at the lower power consumption, other than those factors though. So like I said, you got more points of failure. Plus the way the heat distributes, you could end up still potentially, if your density is higher, have more issues depending on the size of the building. All right, I'll get into questions and I'll try to get through them as much as possible. Hope everybody's having a good morning. Pay Me in Crypto says, Ask Untitled, do you know any significant attacks that proof of stake networks deal with? Yeah, so they have the same potential. Like if somebody owned 51% of the total volume and staked it, not even the total volume, the total staked volume, right? Then potentially, yes, you would still have the same attack vector from a 51% standpoint. This is why there was, the airdrops for proof of stake coins to get all of those coins out to everybody. Or just selling it off early as an ICO built into an ERC20 token. These were common practices for the launch of proof of stake coins back in 2016 to 2018 bull run. Tomac says, Ask Untitled, best NVIDIA card to mine ETH on 30 series in terms of efficiency and hash per watts. Pretty much anything that's not light hash rate, right? So your 3060 Ti non-light hash rate, your 3070s, your 3080s. 3060 Ti is technically the best. 3070s are very close though. Detroit Iris says, Ask Untitled, mine ETH, use ETH direct to buy gold through BitPay or MetaMask on sites like, okay. Not financial advice, right, Detroit Irish? Polytekel says, Ask Untitled, Bitcoin and Raven are much different than garbage pre-mine ETH or centralized Solana. Did you see that T0's blockchain tech is going forward? Same dev for Raven, Tron, and Stonks. Well, they have, so here's the weird thing too, is you got to keep in mind a lot of these guys are the same. So there are devs from Raven that are also working with Flux as well. So that's pretty common, but I haven't seen that one in particular. No. It Just Works says, Ask Untitled, the light hash rate unlocker patch scam was talked about online as Tech Tips the other day, Tech Link yesterday. Anthony did stress the online discussion about it possibly being fake, fortunately. Okay, good. Glad they talked about it being fake. Fundum says, would you buy a Bolon miner? 4K for 60 terahash. I mean, I'd probably just do the M21S's for what, 3,800 for the 56 terahash. Reason being is that they have, they already have modified firmware to overclock, and from what I understand, they're tanks. When I talk to a lot of like the ASIC miners that have been in the game a long time, they really like the M21S's for the cheap side of the ASIC miners because they just keep working. And they have, like I said, that firmware support too for overclocking. So like literally when I talk to other like ASIC miners, they always say that one is like the tank or whatever is kind of what they say. Like they never break. So I don't know about the Bolon miner in particular though. So I have to do more research. But if we're talking about that price point, that's the one I'm leaning towards. Cheyenne Shattuck says, Ask Untitled, in your experience, what would you think is the max ambient room temp rigs GPUs can handle trying to plan a mining shed in the desert? I know for a fact ASICs, or at least the Antminer ASICs, are perfectly fine with ambient room temperature at like 120 degrees Fahrenheit. Does that mean that's their max potential? No. Does that mean they aren't degrading faster? No, it just means that, from my understanding, that's where we're at. From the GPU mining perspective, that one's a little bit more difficult because, like I said, your big thing always, like if you talk to people that are like really functioning like farms, you're not going to be focused on cooling the ambient room temperature down. You're going to be focusing on CFM. And then from there, your primary goal is exhaust, not intake. So you're going to want basically to be sucking the heat out of whatever building you're in. And then at that point, it really doesn't matter. You could be in the desert in Arizona with 115 degree outside temperature. As long as you're sucking that heat out, you're good. So it's not really about max ambient room temperature as much as it is how much of that air you're getting out that was coming off of the GPUs. Because remember, the hottest the air temperature is ever going to be is right as it comes off of the GPU. So that also comes down to, like we talked about before, density versus, essentially multiple GPUs. It's why you may have those 4 Intels, or let's just say 4 1660 Supers and 1 3090. Because the 1660 Supers were probably sitting closer because you have, less density, that heat, the hottest that heat's ever going to get that's coming off of that GPU is going straight into the next GPU. So from a density perspective, like the 3090s being further set apart, in theory, is going to be better than a whole bunch of 1660 Supers sitting really close together. Michael FB says, hi, Son of a Tech. Outside ETC, which ETH hash coins look to be in line to receive the most of the ASIC hash rate after Ethereum's move to proof of stake? We could try to do a ranking video. I'd have to go research them all. Really, the only one that I'm very aware of outside of that would be the ETH at this point. Victor Sanchez says, ask Son of a Tech, would you prefer PPLNS or PPS Plus when the pool pays for the transaction fees? I've gone over all of those before as far as like which ones do things different. I prefer PPS Plus. PPLNS is great, especially if you're going to stay on that pool for an extended period of time. Then you kind of get that first mover advantage on that pool. Nikon FYA says, at Son of a Tech, I have a Windows 10 mixed rig, Vega 64, 3080 Ti, and 3090. How do I get the new ALP functionality to work with the 3060 Ti for the T-Rex miner? I do not know the answer to that. I haven't been using Windows or T-Rex. So personally, I haven't messed with it. Pearl Rival says, at Son of a Tech, is World War going to bring an end to our profits? I think the end to profitability going up was going away no matter what, based on the previous super cycles. I thought that maybe what was going to happen is our new low was going to be higher than it typically is through the super cycle. And I think that essentially because of the geopolitical tensions that we are going to see it closer to what is expected, meaning that 21K Bitcoin potentially with that 1100 ETH potentially. That's how I would see it. Now, I'm not short selling anything. I only mine. I never buy crypto and I don't short sell. So it's not financial advice. And then what I'm doing is the same thing I always do. Continue to mine, wait and see if we can get some good equipment and build up for that next super cycle. Kazuma says, any affordable Bitcoin miner from 1,000 to 3,000? Not really. I mean, your best bet is that M21S for 3,800 right here off of BT Miners. Let's see what else they have, if they would even be worth it. Probably not anyways. No, they don't really have anything else. So that would be your best bet at this time. So, yep. All right. That's going to wrap it up for today. Be sure to hit the like, comment, subscribe button. Share this out with your friends. I think today we covered pretty much everything that we could. Keep your heads up, boys. I know like it's hard to do that when you got a lot of outside stressors coming in. We don't know what's happening. You don't know what your mining profits are going to be tomorrow. You don't know what's going to happen with your job. There's all of that going on. The best advice I can give you is hopefully it's not too cold. you can get outside or at least go get in the gym, get your mind straight, work out those demons, and don't stay up too late and turn the screens off early. All right. Unless you got to watch more Son of a Tech content, then leave the screens on. Just kidding. Turn off the screens early. Thanks for watching. Have a good one. I'll see you next Tuesday.